Bitcoin and the cryptocurrencies price action is finally slowing down after we've had a hot week of price action. So we're going to do a little bit of technical analysis on that. And I got a couple theories on where we could go next. We're also going to get into the news of crypto crackdown regulations with new bills coming out. And we're going to see where people sit on that and theories people have on that, on the legitimacy of if it's for us or for the government. Then finally, we're going to get into the continuing trend of infrastructure being built around digital assets across the world. Today, we're focused on where it's being built in the Middle East and also in Italy. So let's get right into it. Welcome back to another episode of Where the Money At. I appreciate y'all for rocking with me. Let's get it rocking and rolling. Let's go to CoinGecko here. We have Bitcoin sitting at $41,270. Kind of having a cool down after we've had some really hot price action. It's been on a tear to the upside, so it makes sense for the price to cool down a little bit. We have Ethereum sitting at $2,187, basically $2,190. We have BNB sitting at $255, XRP sitting at 61 cents, and Solana sitting at $67.89. So if you've been paying attention to the price action, we've been really hot lately. As far as pretty much since December 23rd, we've been on a tear to the upside, and we've kind of come down a little bit, and it makes sense. You know, you can't go up forever. So if we're going to do a little bit of technical analysis, let's start off with some fib retracements to see where we could kind of range in for the next couple weeks, couple months. So currently we are sitting in between the 382 and the 0.5. Basically in between $42,000 and $36,000. We've had some price action here where we couldn't quite settle. You know, we never really turned it to support or resistance, but it's looking like that's a nice place we can sit right now. But if we want to look at just ranges where we could last, like if you're a trader, this may be where you want to live for a little bit. Let's see, we would be in between 44,000 and 41,000. That seems like a safe spot to be. It doesn't necessarily look to me like we're going to just head straight down. We could, but I think the price action is going to be a little more subtle than that. We haven't had a lot of violent moves. Besides that big move up we had around the 23rd, we've kind of been steady grinding, you know, doing the crab walk. So if we look at a little bit of Elliot Wave Theory on, you know, making some predictions on where we could go, we have a 5-wave impulse to the upside, to the bullish side, and it will probably look something like this. 1, 2, 3, 4, 5. And if we have a corrective wave after a 5-wave impulse, then it would look like this. 1, 2, 3. So that would put us around, let's see. If we were to go bearish, somewhere between 30,000 and 25,000. So that could be pretty cool. And if we were to be bullish, I would imagine it would be somewhere around this area between 51,000 and 42,000. Big range, but you know, who knows where we can go. But that's it for the price action. Oh, I also want to look at the EMA, the 200 EMA. We are well above the 200 EMA, and that's curling higher. So if we bounce higher, we could be testing 50,000, 60,000 if we stay above it. But what concerns me is if we break below it, with it curling up like this, and we'll probably crash below it pretty tough, we may really get under there for a while. Because if you've noticed in the past, like back in 2020, once we get above it, we really have some space in between us and we really get above it. And like back in 2022, once we get below it, we're really below it. So it's just something to watch out for. If you're a trader, you know, be careful. I'm not particularly a trader. I do the monthly DCA, and you know, none of this is financial advice, but I'm just telling you what I do. But let's talk about Bitcoin's volatility, because if you pay attention, it took what, 1, 2, 3, 4, 5, 6, 7 days to get there, and it took 20 minutes to erase a week-long rally. Which is, you know, that's the uniqueness about cryptocurrency, is the volatility. Other markets really don't move like that, but that's not really a shocker to us. No one in the crypto industry right now is hurting because of that one move, unless you had some longs going and you got liquidated. But that's just what it is in cryptocurrency. So let's not forget the volatility that comes with this asset. It's very liquid, very easy to get in and out of versus stocks, real estate, large cash portions out of your bank account. Let's keep that in mind. So let's go to a couple theories I have. Let's start with the price theory on where we could go next. you look on my Twitter, I say Bitcoin's last week looked like something like a blow off top. And it does look like a blow off top to me. We could continue up higher, but it looks like, we've had some great price action all 2023, and that just looks like the blow off top for the year. But that's just a prediction. You know what I'm saying? You shouldn't weigh anything into it. It's not going to change whether I'm going to continue or stop DCAing every month. It just is what it is. So, but here's a couple of theories that I have. I said it's a blow off top because my indicators of a top are showing up. What are my indicators? The media's tone on cryptocurrency and price action. They're starting to get real giddy, real excited about what's going on in Bitcoin price action. They're starting to make price predictions. They're starting to claim that we're in a new bull run. Once the media starts doing that, that's one indicator for me that the top is in. Another one is I saw a Coinbase commercial during a football game the other day. Let's not forget that Crypto.com and FTX commercials didn't start coming in until we were at the very top. I'm not saying that's necessarily what's going on right now, but it's one of my indicators. That's two that I'm seeing so far that we may have a little bit more downward pressure to go before we have another major bull run and see new all-time highs. So that's two. And my third one is people who aren't necessarily into cryptocurrency are starting to text me and call me and ask me about it. You know what I'm saying? Like if you're in the barbershop and you hear people talking about cryptocurrency, like that's one of the major indicators for me that the top might be in for this current cycle, for this current price action right here, at least for the year. So that's something I think we should be cautious of. That's just my opinion. None of this is financial advice, but those are some things I'm seeing that are making me take a step back. And you know what I'm saying? We've talked about the media's tone about price action in the prior videos. Go back and check something out. But that's where we are with it. And here's my last theory for the day. It makes sense that with all the ETFs coming out, the spot Bitcoin ETFs, the spot Ethereum ETFs, the futures, and I've also heard of some altcoin spot ETFs coming out in the future. We'll talk about that in the next video. With all these products coming out, the day they get approved, you would assume that the price would take off. You would assume that would be bullish and give positive price action. But if you've looked at some assets in the past, the day that ETFs were introduced, the market tanked. You know what I'm saying? And the market loves doing the opposite of what we believe it should do. That's why it's the market. That's why most people lose out. So you want to have a steady plan, whether they get approved, denied, or delayed. And if they do get approved, you need to have a plan of if they get, if the price skyrockets that day, if the price does nothing, or if we go down in price action. And I think one of the theories that could possibly play out is we go down. You know what I'm saying? Because it's just what I expect, something I expect the market to do. You know what I'm saying? It's so contrary to what we believe should happen. It just makes sense. The market gonna do what it's gonna do. So those are my two theories. So let's get into the news. More U.S. senators back Elizabeth Warren's anti-money laundering bill targeting cryptocurrency. So Elizabeth Warren she's a huge critic of cryptocurrency and digital assets, and she's lobbying for bills to have tighter restrictions and regulations. Now that could be a good thing, could be a bad thing. So let's read into it. The legislation reintroduced in July already has support of several U.S. lawmakers, but critics have suggested it could threaten financial freedom and privacy. Make sure I'm there. Massachusetts Senator Elizabeth Warren, an outspoken critic of digital assets in the United States government, has announced 5 more senators have agreed to co-sponsor one of her bills aimed at cracking down on money laundering. They go on to talk about who did it. According to Warren, the legislation specifically targets illicit uses of cryptocurrency for money laundering and financing terrorism. So we've talked about how transparent cryptocurrency is on this channel and why it may be one of the it may be discouraged to use cryptocurrency for crime due to its transparency and how you could track it and the digital trail that it leaves. But I don't doubt that cryptocurrency is being used for money laundering, and I don't doubt terrorist groups are considering cryptocurrency as one of their financial options. So if this is true and this is really what she aims to do, that's perfectly fine, because we do need more laws and more regulatory clarity on cryptocurrency, especially for all its uses. But a lot of people believe it's just to get more surveillance and more eyes and more restrictions for retail customers like the everyday people like you and I who want to get in on these assets and, make some financial gains out of it. So this just goes through who all supports it and who does what. And we'll see in the future, but we do want to keep our eyes on what laws are getting passed and what regulatory statements are getting made about cryptocurrency, because it could affect how we can move in and out of these assets. So that's the kind of the bearish, kind of the gloomy news. But let's get into the bullish news. And one thing we like to talk about on this channel is infrastructure being built around digital assets and cryptocurrency. More people, as far as this year, we've heard a lot of stories about Hong Kong building infrastructure to allow their retail customers or just their people in general to get inside of cryptocurrency. We've heard of several stories about Brazil, Argentina, basically just the whole South America building more infrastructure for people to get into cryptocurrency down there, which is good. And now we have an Italian bank partnering up with Coinbase to bring infrastructure and crypto to their retail customers. Coinbase and Caneo partnered to bring digital assets to Italian banks. The partnership between Coinbase and Caneo is indicative of a larger trend in Europe that sees traditional banks and other financial institutions accepting cryptocurrencies more and more. The well-known U.S. cryptocurrency exchange, Coinbase, and Caneo, an Italian cryptocurrency wallet partly owned by two large Italian companies, have formed a new alliance. This partnership aims to make a variety of digital assets more easily accessible to banks and other financial institutions across Italy. Here's the part I like. Caneo will make use of Coinbase Prime to provide institutional-grade liquidity support for crypto-friendly banks looking to expand their digital asset offerings. The company currently serves close to 500,000 in retail customers, and by the end of the year, the partners hope to jointly enable trading and custody service for up to 50 distinct cryptocurrency tokens through this arrangement. So everything starts off with the bank first, and then it comes down to retail. So we see the infrastructure being built, and shout out to Italy. And they just continue to go on to talk about how more cryptocurrency startups and blockchain companies are integrating with traditional finance. And hopefully one point in the future, cryptocurrency won't be separate from traditional finance. It'll just be a part of the actual system. And that's what we want as far as, the projects we're in and trying to make a financial gain from these projects. And finally, we have Japan's SBI looks to Saudi Arabian to continue Middle East expansion. So we have a Japanese company and a Saudi Arabian company collaborating to, have more investments in digital assets. And even though they're in the early stages, it's something you want to pay attention to, because that's why you do research. You want to get in early, because you don't want to get in by the time it's on and popping and everybody talking about it and it's on CNN and MSNBC. You want to get in early so you can find opportunities that you could possibly get into as far as cryptocurrencies, as far as real world assets that are being tokenized and may have an entirely new market to it. And you may find some projects that you may, or some opportunities that you can get into. So let's get into it. Japan's SBI looks to Saudi Arabian to continue Middle East expansion. They have signed a memorandum of understanding on digital asset investments and semiconductor production. I think this is the main part. But Japanese financial services firm SBI Holdings and Saudi Arabian state-owned oil company Saudi Aramco are considering teaming up on digital asset investments and semiconductor production products. They signed a memorandum of understanding that includes establishing SBI Middle East in Riyadh as a base for their regional operations. According to the memorandum of understanding, SBI and Saudi Aramco will consider collaborating on digital assets and co-investing in their digital asset portfolios. They may identify Japanese digital asset startups that could be interested in expanding to Saudi Arabia and launch semiconductor production projects in both companies. Saudi Aramco is the world's second largest corporation by revenue after Walmart. That's nothing to sneeze at. The memorandum mentions Saudi Aramco investments aimed at completing its supply chain or complementing its supply chain. Cryptocurrency is not recognized by legal entities in Saudi Arabia, although the government has shown a healthy interest in Web3. SBI Holdings' partnership with Taiwan-based power chip semiconductor manufacturing was also highlighted. So they say all that to say they're building and they're getting more and more interested in digital assets. Now, digital assets could be cryptocurrencies. They could be real world assets that are tokenized, like real estate that is now tokenized, or one thing that's really, really being paid attention to is bonds. They have bonds that sell government debt. They have a lot of projects that are being experimented with that are tokenizing these bonds, and that's where digital assets are really, really starting at, and I think it'll just expand from then on. So like they say, cryptocurrency is not a legal entity that's recognized right now, but there is an interest in Web3. So I remember we were talking about the metaverse way back, earlier in the year, and it was a big topic and everybody was investing in it. Some things don't necessarily fail, they just may be too early. You know what I'm saying? So, maybe we aren't ready for the metaverse just yet, but looking at all the inventions and all the possible scenarios and use cases, that's definitely coming. I mean, augmented reality, we're very, very close. And virtual reality, that's just going to be a part of our lives in the future. It is what it is. So, that's just a quick video I wanted to get to y'all. We got some price action going on. We're slowing down a little bit. There's infrastructure being built everywhere. Hong Kong, Brazil, Africa, Asia, Europe, everywhere. So let's stay locked in, because the more people that get into it, the better it'll be if you're involved in some of these projects. None of this is financial advice, but I think it's something we should watch out for. And I think we should stay on the cutting edge of the news so we can spot as many opportunities as possible. But that's it for today, man. I appreciate y'all rocking with me. I'm going to holler at y'all.